David, now, without further ado, we are very excited to finally get to have this meeting because there was so much excitement. We had David Bach coming in March, right as everything shut down. And so now, after our long wait, we finally get to have him back. So, Elena, we're turning it over to you to introduce our wonderful guests.
Thank you, Heather. Good evening, everybody. I am thrilled to present tonight's guest, David Bach. He is a man who has helped millions of people around the world take action to live and finish rich. He's one of America's most trusted financial experts and best-selling financial authors of our time, having written 10 consecutive New York Times bestsellers with more than 7 million books in print, translated in over 19 languages. David is a media favorite with over 100 appearances on NBC's Today Show and half a dozen appearances on the Oprah Winfrey's. He's also a director of investor education and the co-founder of AE Wealth Management, which is one of America's fastest growing registered investment advisors groups with over $10 billion in assets on their platform. In addition, and most importantly, he is our Florence neighbor, having moved here with his family from New York City this year. And at this point, I would really like to thank David's amazing wife, Alicia. She is a new member of Women's International Network, and it was she who presented her husband to us. We're so happy that you have joined us. And we do appreciate your effort to promote also other potential speakers. And once again, thank you, Alicia. This evening, we will talk about David's brand new book, The Latte Factor, or Why You Don't Have to Be Rich to Live Rich, www.thelattefactor.com. Look it up. And we will discuss his first book, Smart Women Finish Rich. During the interview, you can write your questions for David in the chat, and we will handle them in the end. But now, help me to welcome David Bach.
Thank you, Elena. Thank you so much for the introduction. It's so nice to be with you.
Yeah.
All of you.
So happy to have you. So, David, how are you?
I'm good. It's a little surreal to me to think that we were going to do this event live in March.
Yeah.
We had the quarantine, and now we're back in the quarantine. So, but things have changed a lot, and we've gotten used to doing Zoom events. So I'm just really happy that we could put this together. I would have rather have done this with you all live, but I know the day is going to come, this too shall pass, and we will be able to hopefully return together face to face, and we'd love to do it live. But I'm glad we could put this together. And Alana, I know you've read a bunch of my books, and I know you put a lot of time into preparing to do this event. So I just want to thank you for co-hosting it with me. So I appreciate it.
That's wonderful, David. I would like to start asking you a curiosity. We're all curious about this. Why did you leave New York, and why did you make Florence your new hometown?
I know, well, boy, I kind of got lucky on that one. All right, well, I'll tell you a little story because it kind of sets the framework in a way for tonight too, which is how this all came together. I traveled around the country. I've been teaching personal finance now since 1994. And for the last 4 years before I moved here last year, I traveled all over the US doing retirement planning seminars for our clients, specifically doing seminars around smart women finish. Can you hear me okay?
Yes, I hear you. Yes.
Okay. Specifically doing seminars around smart women finish rich, smart couples finish rich, and the latte factor. But these seminars were all geared towards our clients who are retired. Most of our clients being in their 60s and their 70s and their 80s. And I do very much this only in a live event. We'll have 200, 300, 400 clients in a room. We have a dinner. I'm sitting on a stage. We do a question and answer period. And I always end my seminars by talking about what I call return on retirement. We'll talk about that tonight too.
Yes, yes.
I talk about the fact that there are three stages to retirement. And this will kind of lead into what led me to come to Florence. And if you're going to take notes, I see a lot of people laying on their couches, but if you're going to take notes, I'm going to prepare you to take notes. Okay, I see Heather with the notes. So
we'll do that.
So the 3 stages of retirement. Stage number 1, typically takes place in your 60s. It's stage one, because most Americans retire in their 60s. 62 is a very common age to retire. And stage one is referred to as the go-go years of retirement. You retire and you can travel. And normally when we see tourists traveling, you see a lot of older tourists traveling because they finally can. They have the money, they have the time, and they have their health. And in your 60s, you have all of these things that are just, it happens to be why for many people, it's the happiest decade of their life. And so they're called the go-go years. Stage one is called the go-go years. And stage two is your 70s, 70 to age 80. And it's referred to as the slower go years. And the slower go years are because people's health decline. Often people don't live through their 70s, and you often lose spouses in your 70s. And so the years slow down. You can't do all the things you could do in your 60s.
That's right.
And then in your 80s, the third stage is known as the won't go years. And often that is because, especially if you're married, the husband is too sick to travel at all. And so, or you lose your spouse, or you can't yourself travel. And so my core message is I tell that at these events is I always say, I don't care what stage you're in, whether you're 60s or you're 70s or 80s. I think you need to treat the next decade of your life like it's the go-go years. And you all need to stop waiting, because what happens to this is very much an American phenomenon. It's not an Italian phenomenon, because in the US, we live to work. Yeah. And in Italy, often we work to live. But in the US, people will work their whole life saving all this money, and they'll get to retirement and then they're afraid to spend their money.
Yeah.
And so I talk about in these events, I'll say along like, look, you did everything right. You saved all this money. You hired this financial advisor, and you're still not spending any money. Stop waiting to spend your money. Go take the trip, travel first class. You don't need to leave money for these kids. Yes. I actually teach my clients to take Social Security early, even the ones that don't need it. Because I'm like, if you don't need the money, you should take the money and spend it. Yeah. So this always gets the audience they're not expecting it. And so then at the end of my events, I do book signings, and then people come up and they take pictures with me and they tell me always their intimate stories. And what would happen at the end of these events, and this was 3 years of this, is that people would come up to me and they'd say, that's the most important thing you talked about in the hour. And then they'd tell me their story. And, some of the stories were very heartbreaking stories where someone would say to me like, my husband, he worked until he was 63. I tried to get him to retire at 60. We took one trip, David, and then he had a heart attack and he died at 64. And we never got to go anywhere. Oh, that's sad. And I would hear story after story like this. And in one event, it's funny because my wife's upstairs listening, and she has never actually, I don't think, heard the story. One event, a couple waited for me in line. They looked really upset. It's not typically what it looks like when people are waiting to talk to me. And after we took the picture, the wife grabbed my arm and she said, David, how old are you? At the time I was 50. And she said, you can afford to retire, right? Right now? And I said, yeah, probably could. And she's like, then you shouldn't wait until your 60s to have your go-go years. And she said, because my husband and I right now, I'm 63 and he's 65, and he has pancreatic cancer. And I have stage 4 and cancer. I forget what her cancer was. And she said, we both expect to we have cancer. She said, we both expect to die in the next 6 months.
Well, no,
and she said, and so we didn't get to do a lot of these things that you're talking about. And she's like, I would do them earlier. You have your health, you're in your 50s, go do them now. And I literally came home after a conversation on a flight with someone who was retiring. And I told my wife, you know what? I think in 2 years, honey, what we should do, because it was a 2-year plan, we should move abroad. We should take our family abroad. We have a son who's going to be a sophomore in college. Let's pick everybody up and let's go live somewhere internationally for a year and have a transformational experience. And so we worked on that plan for 2 years, and we came to Florence, Italy. We love Italy. We love Florence. We came here to explore, to see would this be the right city. We stayed at the Langarna Hotel. We had dinner. We walked on the Ponte Vecchio on a perfect night. And she looked at me and she said, Elena, she said to me, this would work for me. Does this work for you? And I'm like, this works for me. And so we came, but we worked on it for 2 years. And once we got here, like so many people, we thought we were coming here for a year, 9 months. It's funny because Ellie is on this call, and I got to be dear friends with Ellie and her husband, McKaylee. I think McKaylee's watching secretly too, maybe, but McKaylee's the attorney who helped us move here. And I'll never forget the first day being in his office. And he said, a year is going to go by like this. You don't want to stay. You won't want to stay just a year. You'll stay much longer. And it's funny because as so many of you know this to be true, we really thought we were coming for a year.
No.
And then we fell in love with it. And like so many of you, now we're like, we don't want to leave. So
it doesn't work like that, because my sabbatical year is 30 years overdue. And I'm sure there are many people here logged in who have their sabbaticals overdue. So I think, in fact, you will be hooked. But tonight, David, you are here to share some lessons from your 13th book, The Letty Factor. But before we do that, can you tell me how this all started? Because as we understand, you learned about money at a very young age.
I did. So, by the way, I just saw Janelle here. So she came for 7 months, and that was 23 years ago. It's amazing. It gets in your soul. I learned about money from my grandma, Rose Bach. And this little book here, Smart Women Finish Rich, is dedicated to her. It came out in 1998. And my grandmother really changed the whole destiny of our family. And she made it by making a decision at 30 that she was tired of being poor. So my grandmother was very blue collar family from Milwaukee, Wisconsin, sold wigs at Gimbel's department store. If anybody here is old, somebody remembers that somebody's old enough to know, they're like, no, you know Gimbel's department store, because Gimbel's was like the biggest retail department store other than Macy's. And my grandmother sold wigs there. And that was a big job back then. But my grandmother worked because she needed to work. My grandparents didn't have any money, and they lived paycheck to paycheck. And at 30, she decided she was tired of this. And so she started investing. And she did all these things as a woman way ahead of her time. Brown bagged her lunch, saved money, went down to a brokerage firm. The men at the brokerage firm told her to come back with her husband because they didn't open accounts for women. And she was very strong and very feisty. And she's like, if you don't take my money, I'll just go next door and open up a brokerage account there. And she started investing. And over her lifetime, my grandmother became a self-made millionaire. Wow. And she taught those lessons first to my father, who became a financial advisor, and then to myself and my sister. And so as grandchildren, she taught us how to buy stocks, starting in my case, at age 7 in McDonald's. Wow. And so at McDonald's, my favorite restaurant in the whole world, she taught me the lesson that would ultimately change my life, which was, whenever you she used it's such a simple way to teach your kids, by the way, and especially if you have grandchildren. At McDonald's, she said there's 3 types of people. Everything can always be taught on one hand. Three types of people: those who work here for minimum wage, which back then was like $1.50. That seemed like a lot of money to me, but she said it's not a lot of money. And it's very hard to get ahead on minimum wage. And then she said the second type of person is the person who comes here and spends money, which is like you. You're spending money here and you're eating your cheeseburger and you're what's called a consumer. And that's what makes the economy go. And then she said the third type of person is the person who owns this place. That's called an investor. And investors get rich. So my favorite thing in the whole world at 7 was to play Monopoly nonstop. The only person who would play Monopoly with me nonstop was my grandmother, because my parents hated doing it, right? So she's like, I'm going to teach you how to play Monopoly for real. And she took me home from McDonald's that day, opened up the Wall Street Journal, showed me how to look up McDonald's stock, watch the ticker tape on the TV screen, because it was before there was Google, and then took me down to a brokerage firm and helped me buy my first share of stock. And that opened my eyes to a whole world of investing that I didn't know existed, right? And that's a big thing as a kid. Like my 10-year-old, if he's watching upstairs at this very table during the quarantine, I taught my kids how to invest during a market downturn, right? Because the quarantine happened, market's down 34%. Dad, by the way, is pretty bummed out about this, but sat down at this exact table with my kids and said, this is the lesson you're going to learn right now, is that when everything goes wrong, smart investors figure out a way to get rich in downtimes. And so I started teaching them at this dining room table in March how to invest. And my 10-year-old James, who's upstairs right now, I said, James, you have to think like an investor. What are people going to buy right now? Because everything's closed, but they got to buy stuff. What are they going to buy? James looks at the Kleenex and he says, well, who makes Kleenex? And then I taught him how to look up who makes Kleenex. Company was Kimberly-Clark, but I taught him how to do it. And then we bought stock in Kimberly-Clark. He said, what about Clorox? You had to go out and buy all these cleaning supplies. Yep, there you go. And my older son, my teenager, Jack said, well, what about Zoom? You're on Zoom all day. Yeah, Zoom has just gone public, right? So we bought Zoom. So they learned during the quarantine how to invest, how to think like an investor. The first thing James said yesterday, 2 days ago, when I told him about when the word came out that Pfizer's got a vaccine, first thing he said, and remember, he's 10, Dad, I want to buy Pfizer. How much did it go up today? So those were the lessons I learned from my grandmother. Now, I will say this, and I know we have a lot more questions, but I thought all women were like my grandmother, in charge of the money, actively investing. So when I came into the investment business alongside my father, I actually saw that my grandmother was the exception, not the rule. And what I saw firsthand was a lot of my women clients were unprepared financially. They were unprepared when their husband passed away. They didn't know where the money was. They didn't know how it was invested. Some of them didn't even know how to write checks. And then I also saw women being wiped out financially by divorce. Yeah. So I decided, after having 3 meetings with 3 widows the first month in the business, that I would do something about this. And I created a class for women in money. And that was in 1994. There were no classes for women in money. Everybody told me that nobody would come. And we had 225 women want to come to our first seminar. And I just, the Bay Area in California, and I just kept teaching them. Okay. And I've been doing it now since 1994.
That is when you wrote your first book, Smart Women Finish Rich, because in fact, this program has educated millions of women worldwide. So why did a guy think to start a program for women and money, and how did he make it big? Because million women are really a lot. So.
Well, again, big ideas always start small, right? So like my big idea started as a small idea, which was, let's do a seminar for our women clients and then they can invite friends. Yeah. And I rented out a hotel room. And when the invitations came back and there were 225 women, my father said to me, you're going to have a big problem on your hands. I'm like, what problem? He's like, are you sure the hotel can fit that many people? And he was right. It couldn't. It could only fit 110. So I called the local newspaper and said, hey, I'm hosting this event for women in money. You guys should come down and see this event. I tried to run an ad in your newspaper and nobody would even return my phone calls. True story. They wouldn't return my phone calls. They thought it was a fake idea. And instead of me paying for an ad, they came with a reporter and they ran a cover story. And now it was a little local newspaper. I lived in this tiny little suburb called Moraga. It was Moraga into Lafayette. These suburbs had like 40,000 people in them. But it was a local newspaper and I was on the cover of it. And at that first seminar, it's crazy how life works. At that first seminar, I had a woman ask me, what is a good book for women in money? And I answered her because it turned out she was a sophisticated investor. I said, well, the book I like right now is a book called One Up on Wall Street by Peter Lynch. I mean, I'm just dating myself here, but like that was the biggest book in the 90s. And she said, I don't want a book about stocks. She's like, I read that book. I want a book about what you just talked about. I want a financial planning book for women that talks about values, because that's what I talk about, values first, planning your financial plan around your dreams and your goals and your highest aspiration, and all the things you need to do to protect yourself. She's like, I want that book. And so I said, well, let me go to the library and see if there is one. And I literally went to the library. And back in the days when you would go through those little cards in a library, those index cards to find a book. Some of you know what I'm talking about, right? Like nod your heads if you've ever been to a library with index cards. And there was one book on women and money. It was written in the 70s. And so I was like, God, that's so weird because women buy the bulk of books. How can there not be a book for women in money? Well, so then I kept teaching that seminar and then everybody kept saying, you got to put this in a book. And then when I went to sell that book, this first book, Smart Women Finish Rich, I had publisher after publisher tell me that women would not buy a book for women in investing. And in one publisher, and I won't say who it was, one of the biggest publishers in America still to this day said, we'll buy your book, but at most that book's going to sell 5,000 to 10,000 copies. And I said, no, this book is going to sell 1 million copies. And people laughed. And this book has sold 1 million copies.
That's wonderful.
And I just went around the country relentlessly with my own money And I just pushed it and pushed it and pushed it and pushed it. My publisher set up one book signing. I set up 100 book signings. I traveled all over the country on my own money. I hired my own publicist. I stayed in every Motel 6 there was. This book was on the New York Times bestseller list and I was losing money. I was working at Morgan Stanley and my wife is like, why do we have all these losses on our tax returns? I'm like, oh, that's the book business. She's like, then why are you in the book business again? And I'm like, because this is my mission. This is my mission. And she'd say, well, you lost like however much money you lost. And eventually it actually did pay off, but I didn't write the book for the money. I wrote the book because I knew as a financial advisor, I could only work with a certain amount of people.
Yes.
But to reach 1 million people, I had to put it into a book. And that's how it got started.
Yeah, because you really understood that women have different financial needs, different than men. What do you think we as women need to do to protect ourselves financially?
Yeah, well, so let me go through what the specific differences are. And it's interesting because they haven't changed. They really almost haven't changed at all since I wrote this book over 20 years ago, 22 years ago. So number one issue you have, it's a positive issue, but it's a difficult issue. You live substantially longer than men. So like I have 2 Grandma Roses. One of my grandmas lived to be 86. She outlived my grandpa Jack by 14 years. My other Grandma Rose, when I wrote this book and I talked about the average age was 56. It's now 59, by the way. She said 56. She's like, I was widowed at 52. She was at 52. She outlived 2 husbands. She lived to be 96. So women you live longer than men do across the board. And when you look at the typical actuaries, it says that you live 7 years longer. First of all, if you get married, you often marry a man who's older. And often it's the man who gets sick first. And then the family goes through the money that's in savings while he's ill and incapacitated. And then you're retired 30% longer than your husband was. So the single biggest thing is that your retirement years are often 2 decades longer than a man's. One of the things I say, and I'm just so real about these issues. Most men will never know if the financial plan that they have or don't have works. They won't know because men don't run out of money. Almost never happens. It's women who run out of money, and it's because you live longer. So that's number one, which means that you actually need more money in retirement accounts than men have, but you don't. Because on average, women have half the amount of money in retirement accounts. You have half the benefits in Social Security. And you go, well, why is that? And the reason is often you earn less for the same job that a man does. The other reason is that women take an average of somewhere between 7 to 10 years off for childbearing years, and now elder care. It's the daughter that ends up with the elder care of the parents. And so you end up with an entire decade of money that's not going into retirement accounts. And then when you go back to work, you're often earning less because you've taken time off from work. None of these things are fair. They're just facts. Like I always go, women don't need pink mutual funds and men need blue mutual funds. You need to know you're going to live longer. You need to know you need more money in savings. You can't afford to take less risks on investing than men take. You need to know more about what's going on in the personal finances than the husband does, because you're going to end up managing the money ultimately. The time to manage it is now. And those are like the core issues. Now there's all kinds of myths of why women don't do this, and they're total myths. Women make better investors than men. We know across the board that women, when you invest, you outperform men. You don't trade as much. You are long-term investors. You do better. You're actually better at managing the family finances, almost always. So, instead of writing the checks, write the checks and manage the money.
Mm-hmm. So you are truly famous for the Latte Factor, this book. So I have it too. And it's a metaphor because it's even in the Oxford Dictionary. It traveled all over the world. Can you talk about this idea, how it went completely viral?
Yeah, it's crazy how it went completely viral because, again, it started small. I used to teach these 4-week retirement planning classes at the local adult school in Lafayette, California. People paid $12.50 to come to a 10 hour retirement class with me. And in the last night of one of these classes, I had a woman whose name was Kim say, this class has been great, but the problem is you've been talking about paying yourself first, saving money automatically, using your 401k plan, and I don't have the money to do this. She's like, I can't do all these things you talked about in this class. I'm living paycheck to paycheck. Now, when she told me this, she's sipping a latte from Starbucks. So she was with her boyfriend who was also sipping a latte from Starbucks. And I literally said, okay, let's go up. I'm going to go up to the blackboard and let's figure out where you spend all your money. And so I started going through her expenses on literally like a blackboard, like in a classroom with chalk. And I go, so in the morning, do you get caught? Where do you work? And she's like, I work at the Gap. Oh, do you get the free coffee at the Gap? She's like, no, that coffee is disgusting. She's like, I stopped at Starbucks. Oh, well, what does it cost you for your Starbucks? And she's like, well, back then it was like $3.50. And I'm like, okay, well, did you get to eat with that? And she's like, yeah, I get a muffin. How much does your muffin cost? And she's like, that's like $1.50. And I'm like, for a muffin, right? Like, she's like, well, it's fat free. And so I'm writing all these expenses on a blackboard. And before we even get to lunch, she spent $10. And then I just did the math for her. I'm like, you know, if you took $10 right now, you're in your 20s, and you put it in your 401k plan, just took $10 a day and put in your 401k plan, you'd have well over $1 million by the time you're 60.
Wow.
And I actually showed her the compound interest with like a little calculator. And she's like, are you trying to tell me my coffee is costing me $1 million at retirement? It was actually like 1.8 million. And there was somebody really frustrated in the front of the room, and the person turned around and said, yes, that is exactly what he's trying to tell you. You have a latte factor problem. And everybody cracked up. And then as we left the classroom, every single person was talking about their latte factor, whether it was coffee or something else.
Yes.
And somebody said, you have to teach that in every class. And so I literally started teaching in every class. And then, then I put it in my book, and then I did it on Oprah. Doing it on Oprah really helped it go viral, because doing it on Oprah, with Oprah, we had people track their expenses, and we had a young woman in the front of the audience do this. And then we showed her what her latte factor was costing her. And Oprah did a big reveal where she pulled back a sheet. And on that sheet, there was over $250,000 in real cash on the stage. And the audience just went, wow. And that created, like Oprah always called it, like the aha moment, which was, you probably do have enough money. And again, it's just a metaphor. People get so frustrated. He's the guy trying to take away my coffee. And I'm like, no, I'm not. It could be anything. It could be bottled water. Like, you can still get water for free in the faucet. Like, I don't know what it is, but it's always something. Yeah. I think we actually figured out in a hard, difficult, strange way, like in the quarantine, we all stopped spending money. This is the most strangest phenomenon, right? Besides food and housing, we didn't have anything to go buy. Which is why actually at the end of April, people actually had more money in cash around the world than they had ever had. Because they didn't spend any money, and in many cases they were still getting checks. It's not that way now, but so the latte factor became this worldwide phenomenon and a metaphor. And the beauty of it now is like this is the Italian version. They changed it. It's called here they call it the El Factor Cappuccino. Everywhere else around the world it's called the latte factor, but it's neat because this came out in Italian, and we're in 12 languages now with this little story.
Wonderful. It is different than other books you wrote. This is really a story, and it's also more geared towards younger people, especially women. Can you explain why you made it this way, why you built it up?
Yes. Well, so first of all, I'll just say this to anyone who's got a dream. Sometimes people you tell people your dreams and they still don't go for them, right? Like that's part of being an entrepreneur. We have all of you amazing entrepreneurs here. We always have to push against no. And I wanted to do this book for 10 years. And every year I would say to my publisher, I want to write the Latte Factor. I wanted to do it after the Oprah show. And they would say, no, you and I had all these books on the bestseller list. So they're like, no, you've got a formula. Stick with your formula. And my formula is nonfiction financial books. You're like the leading self-help author in personal finance. Just do that. I'm like, yeah, but here's the thing. I'd have this argument for 10 years. Here's the thing. Most people won't read a financial book. most people need a financial book, but they still won't read it. People will buy a book, but they won't always read this book. They might read part of this book. I mean, they're like, believe me, lots of people have read the whole book, but I just know how people are. So what I wanted to do was package up the core financial lessons that are needed, especially for young people, into a little tiny story that you could read in less than 90 minutes. Ideally, a book you could read cover to cover in one setting. That would be such an easy story to read and kind of like super life motivating, and not just about money, but really about like going for your dreams, listening to your soul, taking risk, that people who wouldn't normally read a financial book would read it. And you know, it's amazing how life works. But my son, Jack, I don't know if he's watching, he's upstairs and he's 17. I don't know how that's possible. He hadn't read any of my books. And this book, on a plane flight, when I had the galley, he read it cover to cover. And in 90 minutes, he turned to me at the end of the book, and really, he was exactly kind of my target. You know, I really wrote this book for kids in their 20s. He turned to me and he said, "Dad, this chart here where I can be a millionaire if I invest this amount of money at this age, can we do this? Because I want to do this." And so he was inspired. And you know, even my 10-year-old read most of this book. And it's, again, realizing that's a metaphor. My 10-year-old who plays video games came to me and said, "You know, Dad, I don't have a latte factor because I don't drink coffee." You know that, right, Dad? He's a very sophisticated 10-year-old. He was 8 when he said this. He said, "But I have I forget what game it was. One of those games where he buys stuff inside the game."
Yeah.
And he's like, "I've spent hundreds of dollars on stuff inside this game." I'm like, "First of all, you have? How did you get this money?"
Yeah.
And second, and he goes, "And you know what? I wish I had all that money back because I could invest it." So I just really wanted to put this book into young people's hands. And the main character is a woman named Zoe Daniels. She's in her 20s. And it's done exactly what I hoped. I hope to reach millennials. Millennials are the next generation, and we have to reach millennials. Millennials, they need, if you start when you're young, this is all so much easier. It's all so much easier. The number one thing people say when it comes to their money, "I wish I'd started saving and investing sooner." And so, like, to the parents out there who got young kids, I'm like, so they won't listen to you, but you might be able to give them a story at Christmas or Hanukkah and go, "Hey, I got you this little book. We saw this guy speak." And then just give it to them. Because what happens is some of them will read it. Some of them, this little book will sit by their bed for 2 or 3 or 4 years, and then they'll read it. Another book I wrote called The Automatic Millionaire. This is the most passed on book to young people that I've ever done. A lot of parents give this book to their kids, and then 5 to 10 years later, they read the book. But I think, you know, the biggest mistake we've made in the US, and I know it's probably the same thing in Italy too, but like, we don't teach kids about money in school, which is like insane. Like the stuff that my kids are learning, a lot of it they'll never use.
No,
But you know, you get out of college and you don't know how to invest. Everybody's waiting to take your money from you.
yeah, but I don't think even in Europe, anybody is being taught how to handle money. I would like to switch gears now a little bit, because there's so much happening in the world economy, especially with this COVID-19 raging the world. How do you think the virus will affect the global economy, and what do we need to protect ourselves again financially?
Yeah, good question. So I've been podcasting about this actually ever since the quarantine started. Here in my podcast, in fact, if you just put in the notes here, the podcast is called, it's pretty easy to remember, The David Bach Show. Maybe somebody can throw a link in there, but because I've been doing podcasts on this issue. And part of the reason I started doing these podcasts during the quarantine was I've seen this show before. Like, because I've grown up investing, this is like my 4th go around, right? Like I saw the 80s, I was a kid in college when the market crashed, but my dad was in the business. I watched with my family how we got through it. I was in the Bay Area during the dot-com days and saw that all blow up. I lived through the 2008 recession. I was on the Today Show every single week doing Money 911. And so when this happened this time around, I realized I've got to get back out in front of this because I know what's going to happen and I have to prepare people. So the first thing I'll just tell you this, like in March of this year, the market went down 34% in 9 days.
Wow.
And that's the fastest decline in the stock market in my lifetime. And everything went down. I mean, it was across the board wipeout. Every single asset class got crushed. Stocks, bonds, real estate. There was no place to go that was safe for 9 days. And if you go back and listen to my podcast called This Too Shall Pass,
Yes.
I talk about like, look, this is horrible right now. I'm personally super upset about this, but I am here to tell you this too shall pass. I am here to tell you, like in my books, like in here where there's a chart, the average market decline when it's this size takes 102 days to recover. On the long term, it takes 17 months. So I'm here to tell you, if you turn off the news and you don't panic and you don't sell, this is all going to pass.
Yes.
And if you do sell, you're never going to catch the ride back up again. And that's exactly what happened. And people did sell in March. And the market turned around and just shot right back up. Part of that's because the Fed pumped money into the system to prevent the market from collapsing and went out and bought everything. But as I sit here right now, the market's at an all-time high. So if you did panic or you didn't have a good financial planner and they panicked, you got really hurt. Now, if you lived through this time and you're close to retirement, or you're retired and you stayed the course, now's a good time to rebalance. Now's a good time to pull back from some of the risk. Because what I said back in March, I said, I think it's going to take 12 to 18 months for us to get through this coronavirus economy. Okay, I said that in March. Now what I would say is we're years more to go. We're years more to go. And if you look at the travel industry, the live event industry, they're not expecting normal travel to return to the marketplaces until 2022 and 2023. So the economy that you have to focus on is your own economy. You have to focus on your own economy. Not everybody's struggling right now. A lot of businesses are pivoting and doing fantastic. Some businesses are never going to recover. I mean, I hate to say that, but there are just some businesses that are done, industries that are done. Then there are entire new industries being built. So this is one of those times where, for many people, this is when we get our resilience, and this is when we reboot, and this is when we relaunch. And if you listen to some of my podcasts, what I talk about is the mental mindset on how to do that. Because if you're struggling right now, and I know so many people are, you can get really depressed. And when you get depressed, then you can do things that feed your depression. You can drink too much. You can eat too much. You can stay home and watch Netflix all day. And if you go down that cycle of worry, worry begets worry. So I talk about, like, instead of worry, you need to work. Instead of making memories where you're thinking about what's wrong, you need to meditate. You need to move your body. So and this is my podcast, but I've gone to, like, in the morning, you got to meditate in the morning. You need to move your body. You need to find meaning. I'm a big believer in doing journaling in the morning, where you write down your positive focus of what you're grateful for from the day before, where you line up the 3 things that you're going to do for the day. And then at the end of the day, you do a positive focus and you go, okay, what did I get done? What am I grateful for today? And the other thing is, if you just focus on service, like when I got depressed in March, because this was all happening, I own an investment company and my own portfolio's getting knocked down and we're here at home, I focused on service. Who else can you go help? Because as soon as you focus on who else you can go help, you get out of your own personal worry war. And the other thing I'll tell you, I have 600 advisors, financial advisors who work for us. And I'd say to our advisors who are all worried about not being able to go out and get new clients right now, I'm like, get new clients. Call every single client you've got and love on them. Your only job, like this is my financial advisors, your only job right now is to be talking to your clients. I have so many friends who are worried about prospecting when they've got all these clients that they had, when they should be talking to their current clients.
Yeah.
So you've got to focus on your own economy. I will say this, there is going to be a vaccine. Is it Pfizer's vaccine? I don't know. Is that vaccine going to fix everything in 90 days? No, it's not possible. They can't even make enough vaccine to make it that possible. Is everyone going to take the vaccine? No. And we can see here in Italy, like it's been super humbling, right? We got the coronavirus, COVID-19, basically wiped off of Italy. We were down to 100 cases a day. And now we're back to record numbers. So we're the second wave all over Europe too, right? It's not just Italy.
Yeah.
Second wave is all over Europe.
Yeah.
The US hasn't even finished their first wave. And 1 out of 2 Americans can't agree that they should wear a mask. So there's not a quick fix to this.
No.
Yeah, someone's going like this. I know, it's insane.
I know, it's crazy. But for those in the room who may be approaching retirement, you believe people should hire a financial advisor, because you talked about financial advisors, and primarily work with one person or with 2 or 3? Why is this?
Yeah, well, I mean, first of all, managing money, quite frankly, and doing a financial plan, for the most part, it's pretty complicated. And so when you retire, I think it's kind of, look, I'm totally biased. I grew up in this business. My family's been in the financial advisory business for 5 decades. But here's the truth. It's like, when you retire, the idea that you would all of a sudden turn around and manage all your wealth and figure out how to do this, it would be like figuring out how to fix yourself when you're sick. I mean, there's a reason you go to a doctor when you're sick, and there's a reason you go to a dentist when you need your teeth cleaned, and there's a reason you call the plumber to fix the plumbing. And so when it comes to your money, if you can find it, here's the thing, this is the hard part. If you can, and I'm not soliciting anyone because I don't take clients personally anymore. If you can find a good financial advisor, they're worth their weight in gold. The first thing, though, is you should get knowledgeable about money yourself. Smart Women Finish Rich prepares you to be your own financial planner. However, it also teaches you how to work with a financial advisor. And the key is, once you read a book like this, you're knowledgeable. You're so knowledgeable that you can quickly tell if you're meeting with a good financial advisor or a bad one. Like we have on my website, I got to remember to tell everybody this. We have a website that we just put up recently. We relaunched this website. It's finishrich.com. And on this website, we now have almost 100 new articles, that like 125,000 words of new content on personal finance. And we have a section on there also where you can ask me questions, where it's just called Ask David Bach. And so today I was reading through, there's like 80 new questions in there. And I got a question from someone who said that their financial advisor was telling them the only place they should be putting money is in a whole life insurance product. Didn't want them buying mutual funds, didn't want them owning stocks or bonds. The only thing they should own is whole life insurance. And I was thinking to myself, like, I haven't answered this person yet. But I'm like, that person is not working with a financial advisor. That person is working with a salesperson. A financial advisor does a financial plan. That's where they organize all your money. They show you exactly what you have. They work on your cash flow. They show you how much money you can spend. Then they show you, based on the amount of money, how much that money can produce in income and how long that money will last. And that's super important to know. And I think when you look at people you meet a lot of people here who are retired. They've come to Florence and they've retired. And, Florence is a great place to retire. It's amazing. I think a lot of people could live a better life in Italy than they can in the US in retirement. And they don't know that. Just healthcare, such a game changer here, that you can go get healthcare and it's almost free. That's a big thing in retirement. The biggest thing that people have to worry about is healthcare costs. The American system is so broken that you have to be so rich and have so much money to get basic healthcare costs. So I'm going off on a tangent here, but what I'm saying, people who are happy in retirement, it's because they're not worried about running out of money. So, I think having a financial planner, I would tell you to get a financial planner before you retire. Like, too many people wait until 59 or 60 or 61 or 62. 50 is like a really good age to get a financial planner. Once you have over a certain amount of, usually I tell people over $100,000 in investable assets, go hire a financial advisor.
That's a good, I think it's a wonderful initiative also, that I think everybody has to take note of this, finishrich.com, and we will ask you a lot of questions, I'm sure. So you also have a well-known belief that investing should be boring. Can you explain what that means?
Yeah, I wish I had a napkin here. So this lesson comes from Peter Lynch, who used to run the Magellan Fund. Peter Lynch had his statement. He said, if you can't explain the investment to me with a crayon and on a piece of paper, then the investment's too complicated. So he ran one of the largest mutual funds in the world. He was one of the most sophisticated investors ever. And I was like, huh, it's pretty interesting, right? Like, he's a sophisticated guy, but his point is like, shouldn't be complicated. Coke how many of you are familiar with Coke? Everybody's hand goes up. Yeah. Guess what? Billions of people drink that stuff every day. That's why we own Coke. How many of you are familiar with McDonald's, right? So he'd go through all these examples and he's like, so when someone's got this cockamamie investment idea that they can't explain to you, why would you put money in it? And I was like, huh, and I heard that in my early 20s. Every time I've lost money, it's because I've gone and invested in something that either A, I didn't totally understand, or that's actually it, to tell you the truth. It's always been, I invested in something that's outside my expertise and it was complicated. Investments should not be complicated. You want to eat vanilla ice cream and chocolate ice cream for investments. Like, you want like stocks and bonds and a little bit of own a home, pay off the debt. You know, I had somebody reach, one of those people who emailed me, what do you think about Bitcoin? My financial advisor thinks I should move a third of my assets into Bitcoin. I'm like, and he's like, and I'm 64. I'm like, Bitcoin for a 64-year-old? Are you out of your freaking mind? First of all, I do these events and I'd say to people in there, because I get this question in live events, like 300 retirees in a room, and someone asked me about Bitcoin. How many of you have used Bitcoin? And like the room, not one hand goes up. So none of you have used Bitcoin and you want to invest in Bitcoin? Like, how many of you invested in the US dollar? Nobody's hands go up. Why would you invest in a currency? The only reason is you think that currency is going to value. That's not called an investment. That's called gambling. Yes. Take your money to Vegas and just have fun with it.
Can you talk also about this retired concept of yours called ROR? I think it's important for us to know also about this, to hear about it.
Yeah, so I taught in the very beginning, I talked about this. The concept of return on retirement, not return on investing. Let me just say it again, it's return on retirement. So ROR stands for, I'm going to just type this in here, for return on retirement. And, for those of you who are not retired, you could just call this return on now, RON. So most banks, financial service companies talk about ROI. Everything is about ROI, which stands for return on investing. The banks, the brokerage firms are obsessed with rates. Whatever the rate is, 3%, 4%, 5%, 10%. And they've trained us to be focused on rates. And the reason rate of return is important is you want your money to make money. But what's most important is that your money actually gives you a better return on your life. So in retirement, it kind of goes back to return on retirement. You worked super hard to reach retirement. Now use your money to have the best retirement of your life. Some of you are here early. You're here in your 40s and your 50s, and in a way, your life might be like semi-retirement. Use your money to get the best return on now. I think COVID-19, this whole thing that we're going through globally, is also like the ultimate wake-up call for stop putting things off. Like one of the biggest blessings in my life, aside from the fact that we got to come here before this all happened, right? Because if we had waited, if we had not pushed ourselves to come here the year we did, then we never would have got to do this. My older son would have finished school in New York. He would have been, going to college. We would have been quarantined in Manhattan, and we never would have got to do this. It's because we pushed ourselves to go do it. I think the thing to do right now is look at your life and go, what are you not doing that you want to do? And one of the questions I tell people to look at is like, if you only had 3 years left to live, what would you want to do in the next 3 years? Start doing more of that. And then also, if you knew you only had 3 years left to live, what would you stop doing? Because we all are guilty of sometimes majoring in minor things. And think about like, what are you focused on right now that's just not important, that you could just dump and let go? Go into 2021 and be like, okay, that's over. I'm not doing that anymore. I'm done. I'm putting this year behind me. And in the new year, I want this. And then just start moving yourself in that direction.
So your life was shaped by a conversation you had with your grandmother. And this must have been a very, very special person on her deathbed. What did she tell you? Can you share this story with us?
Yeah, Elena, you bet. So this is actually in the back of the Latte Factory. There's a character in this book. I don't want to give the whole story, but there's a character in this book that's based on my grandmother. And my grandmother, when I was writing Smart Women Finish Rich, this is my grandmother, Rose, who taught me how to buy my first stock. The book was done, and she knew I had written the book, and she knew the book was dedicated to her. And my grandmother had a stroke. And unfortunately, she was in a nursing care facility, and I, being in my 20s, and my grandmother had been so strong that I just didn't fully grasp how bad it was. I thought she was just going to bounce back and be okay. And I asked my grandmother, you know, did she have any regrets in life? And that the day I asked her this question, she said no. She's like, I've had a great life. You know, your father turned out well, and I'm so close to you and your sister. And she went through all the things she was grateful for, and like, that's amazing. And then the next day I came back and said, hey, Grandma, how'd you sleep? And she's like, terrible. I was up all night long thinking about all my regrets. And I was like, oh no, Grandma. And then she's like, and I want to tell them to you. So she told me her regrets. She went through 5 of them, and they went all the way back to the age of 17. And she went through each one of them with me. And it was hard for her to go through them because she couldn't talk very well because she had a stroke. And when she got through them all, she said to me, David, the lesson's not in my specific regrets. The lesson's why I had them. She said, because I'm going to die in this bed. And I said, no, Grandma, you're going to get better and you're going to come to my wedding. And she's like, no, I'm not. And I'm probably never going to leave here. And she said, and I'm never going to know what could have been. She's like, my regrets are all 5 of those times I told you about. I came to a fork in the road. I had to make a decision, and I took the safe road. And she said, so what I can tell you is the same thing's going to happen to you. You're going to come to these forks in a road where you're going to make a decision. And she said, what's going to happen when you get to the fork in the road is that there's going to be a little boy inside of you who wants to take the road of risk, who's like, come on, let's do it. Let's go. Let's see what can happen. And then she said, then there's going to be a big boy. He's like, no, don't go that way. It's too dangerous. Let's go this direction. And she said, sometimes that big boy is not even you. It could be your parents, it could be your boss, it could be society, it could be your friends. And she's like, all I can tell you is my last lesson to you is don't listen to the big boy. Listen to the little boy and let your little boy come out and play.
Good.
And she's like, I would tell that to everyone you know, because whether it's a little boy or a little girl, we all have that person inside of us, and we're all afraid.
Yeah.
And she's like, and so I drove home from the nursing care facility, and I went back to my office, and I broke down in tears in the garage underneath my office, because I was working at Morgan Stanley, but my life's passion was I wanted to go teach 1 million women to be smarter with money, and I knew I couldn't do it staying at Morgan Stanley long term.
No.
And I made a commitment in the garage of that parking lot of Orinda Theater Square that within 3 years I would leave Morgan Stanley and I would spend the rest of my life doing this.
Yeah, that's wonderful. It's really music to our ears. But when you talk about having fear, why or awkwardness, I mean, why is it that money, speaking of it, asking for it, makes some people, especially women, so uncomfortable? Do you know what you can do about this?
Yes. Here, first of all, we're not trained to talk about money.
Yeah.
Unless you're super lucky that you grew up with a family that talks about money. Yeah. Then it's just like this totally secret conversation. I grew up in a super weird family that talked about investing at the dinner table every single day. The only way you could get my dad's attention was to talk about the stock market. Still to this day, it's pretty much the same. And so as a kid, you had to learn how to have these conversations about the economy. But we don't teach this. Like, instead of focused on getting your daughter to go to college, and I want your daughter to go to college, but like, teach your daughter how to negotiate for a higher pay when she comes out of college. Teach your daughter how to ask for more money. Wow. You know, the single biggest reason women earn less than men, we know the number one reason outside of discrimination. Yeah. The number one reason is that women don't ask for more money. Yeah. So all the studies show when a a job offer is given, women do not regularly, as often as men do, negotiate.
Yeah, that's true.
Everything in life is negotiation. The first offer, that's all that is. My grandmother would negotiate with a rock. Okay, my grandma's a multimillionaire. I took my grandmother to go buy a television set. My gift to her, because she's got this broken down TV. It's like, I come over and watch your television. It's like shaking. I'm like, Grandma, you need a new TV. Let me buy you a television. No, I don't need a new TV. Come on, we'll go to the store, we'll buy a television set. So I negotiate because my grandmother's there for this television set for an hour. No matter what prices he's made, she beat this guy up so bad, right? So she finally gets, this poor guy just wants us out of this television store. It's all done, and she says, "Then you're gonna throw the shipping in, right?" And he goes, "The shipping? No, I can't throw the shipping in. You've got me to get the price down so much." I'm like, "Grandma, I'll pay for the shipping." No, I'm leaving. If he won't give me this TV with free shipping, I'm going somewhere else to go get it. I'm like, "But Grandma, I'm buying you the television." But what my grandmother was still teaching me were lessons. Negotiate. You've got to realize your own worth. Nobody shows up and goes, "You're worth so much money." You have to expect the money. I was supposed to do a keynote event in San Diego, California, as a small example, an event that I wasn't going to do because I had no desire to fly from here to San Diego to do it. Then COVID happens. They call me up and they say, "Hey, that event that you passed on, we're going to do it virtually. Could you do it?" I go, "Yeah, I could do anything virtually. This is fantastic. I love this."
Okay.
So they said, "Well, great. What would your fee be since it's virtual?" I go, "Well, let me ask a question. How many people did you expect to have in the live audience?"
Yeah.
4,000. Great. How many people do you expect to have online? We think we're gonna have the most we've ever had, like 8,500. Great. So did you want me to double my speaking fee? Because they were expecting me to give them a discount. I'm like, "Yeah, I'm not giving you a discount." So, and then they pay the full speech. And the other day, somebody told me, speakers are taking 80% discounts because events are virtual. I'm like, "They are?" Because I'm not. I mean, a lot of people who have pivoted online, these events online are way more profitable now because there's no cost. So again, you get in life what you negotiate for.
Negotiate.
Some of you, the fastest way you could make more money would be to actually raise what you charge.
Okay, but so we're here in Italy, and exactly as you say, we do not really learn how to manage money. And I'm sure you have noticed everybody has to look good, wear sharp suits, have big cars. Essere bello is an unwritten rule in Italy. So what would you say to a person who is all big hat, no kettle? And could you kindly explain, for those not familiar with the American culture, what this expression means?
It's fun because my wife upstairs, Alicia's from Dallas. People don't know that because she lived in Norfolk for years. But big hat, no cattle, excuse me, big hat, no cattle is a Texas phrase. And the phrase would be literally from the guy driving the convertible Cadillac with a big hat. And people would say, "Oh, that guy looks rich, but he doesn't have any cattle." And it became a phrase, right? You want the cattle, you don't want the hat. You want the cattle, you don't want the Cadillac. Today I go, like, there's a radio show called The Breakfast Club. It's like the biggest urban radio show in America. And, a lot of the rappers who come in there are wearing $1 million of their jewelry. And one of the things I said was, you have people coming in here with more jewelry on than they have in a retirement account. Oh, thank you. My wife just brought me water. Thanks, honey. And if you open your closet and the value of the clothes in your closet, not the value actually, what you paid for your clothes are worth more than how much money you have in an investment account, something's wrong, right? If you have a car, classic American thing, it's funny because it's not an Italian thing. Classic American thing is you have these expensive lease cars. Most BMWs and Mercedes and Teslas are leased. If you have a $50,000 to $100,000 car and you don't have you don't have 3 times that amount in an investment account, like what are you doing driving a car that's worth $100,000 and you don't have $100,000 in cash? You're somebody who's looking rich and is poor. That's actually the average American. The average American looks like they're way wealthier than they are. Now, Italy, I actually think is a little different because first of all, you can look really nice in Italy for less money because clothes are less expensive here. And most Italians don't have 20 suits. They have 3 really nice suits. They have 1 really nice pair of shoes. Like they have really nice things, but they don't have the insane level of what you have, I think, in America. And I go back to, because I think Italians are more focused on living well versus, I actually have a different, I think Italians are focused on living well. I don't, so, but I'm coming from the American expat standpoint. I've only been here 14 months. So there's a lot that I don't know, but the one thing I see, the thing that blew me away about Italy, so the average American takes 5 days a year off.
Yeah.
5 days. The average American doesn't take half of their vacation time. The average Italian gets like 6 weeks a year off. I think even more than that. Like nobody works in August, right? Like if you were an American and you took the month of August off, people are like, oh my God, how did you do that, right? Like here, everybody takes the month of August off. So it's just a different culture, but I think the culture here has got it figured out. Because you don't have to be rich to take a month off here, which is kind of nice.
No, in fact, what you're trying to say now here, what is evident is that you would always advise to buy a Gucci stock instead of Gucci bag.
Yeah, and I don't actually know, quite honestly, if Gucci's public or not. But a great example, that is a good example. A good example would be use Starbucks.
Mm-hmm.
Like if you're somebody who said, I'm never going to give up my Starbucks, great, then buy the stock because you're going to go there every day. You should at least be investing in it. I spend way too much money at Apple. I'm on an Apple computer. I got an Apple phone. My kids all have Apple appliances. I'm wearing Apple earphones. It used to really bother me until I bought Apple stock. I've made so much money in Apple stock that my family now can buy computers for the rest of their life, and I won't be able to spend all the profits that I've made.
That's great.
So the stuff that you use every day. I own Zoom stock now. I use Google every day. I use Facebook. All the things that I use, I try to own the stock because I also want to make money off my own spending, which if I'm spending money, other people are spending money on the same thing.
Mm-hmm. So in your books, there are important charts. Do they also apply in Italy? So for example, 10% investment return you're talking about?
They do, and I'll tell, yeah, they do, because first of all, when you look at the charts in my books, we don't just use 10%, we use all types of rates of return, because all they're trying to show you is compound interest. Mm-hmm. So when you money, one of the things is there's this thing called the rule of 72. This is super simple, but the rule of 72, you take the number 72 and you divide it by a rate of return. And that tells you how long it takes to double your money. Mm-hmm. So if you take 72 and your money earns 10%, you roughly double your money in 7 years. If you take 8, to take 72 and divide by 8, like you can take any of these rate of returns, you can see how long it'll take to double your money. If you earn 1%, it takes the rest of your life to double your money. You actually can't, because with inflation, you go backwards. So you got to get a decent rate of return. Now, the US stock market has averaged right around 10% annually since 1926. Most people aren't going to invest in the Italian quote unquote stock market only. They're going to invest in a global investment or a worldwide investment. Mm-hmm. Worldwide investment's the same thing. Stocks have averaged globally, US, worldwide, like somewhere between 8, 9, 10% annually over 100 years. By the way, lots of people consider that to be a very low rate of return. Like in China and certain countries where they're trying to now make 50 to 100% a year because they think, because of Bitcoin, they're going to get rich overnight. They think 10% is nothing. Is it easy to make 10% a year? No, it's not. And most people aren't all in stocks. They're in a balanced portfolio. They're 40% stock and 60% bonds. And that earns about 8% annually. It's a great, boring approach to building wealth, by the way.
But when you're building wealth, but you also talk about tithing. Why do you think it's so important to give back? And how can somebody who's living from paycheck to paycheck go about this?
Well, so first, there's a lot of ways to give back, right? Like a great quote comes from John Templeton, one of the first billionaire investors. He said, the secret to living is giving. I'm gonna write that in here. And what he talked about was the idea that before he was wealthy, when he was making $50 a week, he actually tithed half of his income. And he became a self-made billionaire. And what I did when I wrote The Automatic Millionaires actually was curious, what is the common link between people who are high net worth individuals? Is there anything that they've done? And the common link is they started giving to charity before they were rich. So I actually think that the magic pill to take if you want to become wealthier is to give some of your income away to help other people. But there are a lot of ways to give. If someone's like, I have no money to give right now, you can give your time.
Yeah.
I'm giving my time right now to this event. I'm not charging Win for this event. I don't do these events ever for free. I'm doing this event for Win. This is giving back. I'm giving back to the community of Florence. So, you could, whatever you do for work, there are ways that you can give back. Someone here talked about that she does coaching or all the things that you could help somebody else by giving a free session.
Yeah.
We went out and filled up the baskets with food during the quarantine. And my son Jack said at dinner, do you think the baskets are going to be back out? Because a lot of people now are going to be in trouble here in Italy. And I said, I don't know if the baskets will be back out, but we can go get a basket. We can go to the grocery store tomorrow. We can go make a box. James, you're a great artist. You can make a sign. And we can go put the box back where it was. And people can start filling it up again. So that's a little way we can go give. We went and filled that box up. Every day we would put food in there. And in the beginning, my kids said, do you think people are going to need this food? And I said, well, we won't know until we do it.
Yeah.
And we went and we filled up one of those boxes. And 2 hours later, that box was empty.
Yeah.
And so there are a lot of people here in Italy who are hungry.
In fact, it was during lockdown that happened a lot. So I would like to do one of our last questions, and then we have time for questions maybe for the public. Your book's premise is that it's really not about the money, just what you just told us. It's all about going for your life's purpose and dreams. Why is this so important for you to share?
Yeah, because I think that's what it's all about. I think we're here for a small little window of time. And we're here to live our best life now. And stop waiting. Stop thinking we're going to be here forever. We're not going to be here forever.
No.
So, the idea literally love more, give more, do more, be more, whatever that means to you.
Okay.
Money is a tool to just free you to go do that.
I have some questions here from the public. And the first is, do you know if there is an Italian equivalent to the 401k fund?
I don't know. Somebody else here who's Italian could chime in. I'm not an Italian expert. My experience is that every country's got their own version of a retirement account.
So as king for a friend, what's a person's Latte factor for a person in her early 50s?
You know what? What is a person's Latte factor in their early 50s? Everyone's Latte factor is personal.
Yeah.
So it's whatever you spend money on every day that maybe you don't need to spend money on. Whatever it is, it's so funny how you end up doing what your parents did. My parents, it would piss my parents off to no end when we wouldn't turn the lights off before we went to bed. Because my parents would be like, you're wasting money, right? Like, and now I'm the same way. I'm like, who left the lights on downstairs? Because it's wasting money.
Yeah.
So, you know, all those things that you grew up with, but like, you just have to think about like, what do you spend money on that you don't need to? Because sometimes a latte factor can also be cutting out something that you're paying for that you don't use. Some of you are paying for gym memberships and you're still not going to the gym. It's $100 a month and you're paying for Virgin. Virgins now you can't go. Stop. Like, stop paying for stuff you don't use.
Yeah.
Stop thinking, well, in 6 months I'll go back and use it. Great. Then in 6 months you go back and renegotiate a better deal.
So here's another one. Do you ever invest in futures? How are they different from stocks and bonds?
You find somebody who can explain futures on one piece of paper, that will never happen in a million frickin' years, because futures are so complicated. The only thing that's going to happen to you when you go invest in futures is you're going to take your money and it's going to go all like this. It's going to just go, bye-bye, see you later.
Alligator. And that's,
no, I've never invested in futures.
That's a very clear answer. Is buying real estate in Italy now a good investment?
I keep asking this question to everyone I know who invests in real estate in Italy. If Michele were here, he would say yes. You know what? I don't know the answer to that. I'm very curious. I think that I have to believe in 2021, there are going to be investment opportunities. But real estate is so different than here than the US, because in here, this is what I've heard and what I've seen. First of all, there is not, in the US, I can go online and I can figure out what the price of real estate is in a certain market, and I can see all the comps, all online. I can figure out what does a house cost? What do the houses sell for? You can't do that here. I can't figure out online what this apartment sold for. I can't figure out what everything in the building sold for. In Italy, the price is what the person says they want to sell it for. And people just make up prices. And part of that's because a lot of people own real estate here and they inherit it from their family, and it's been in the family for 50 to 100 years. And so they don't have to sell. So real estate's a different ball game here. But you know, it always comes down to price. The other thing I've been told about Italian real estate is it's very hard to sell your real estate here. You know, like it can take 2-3 years you buy something and take 2-3 years to sell. These are things my investor friends have told me. So I know that real estate here is what you need to look at it, I've been told, is a much longer term investment. And it's a place that people put money to park their money, but they're not putting it into real estate to flip their properties. In the US, people buy homes all the time and they're like, yeah, you know what, in 2 or 3 years, it'll be worth more money, I can sell it. I've been told repeatedly that's not how to look at it here.
But how do you pay for your house if you want to do it with a mortgage, etc.? Do you have, because that's what I noticed in Smart Women's Finish Rich, that you have this special way to pay off very fast your mortgage?
Oh, excuse me, you're talking about the biweekly mortgage plan. So let me just tell you why now is a great time to buy a home. And maybe it's not, maybe you're buying here, maybe you're buying somewhere else. This is a good, let me tell you, this is a once in a lifetime opportunity to buy real estate because rates are so low.
Yeah.
We will never see rates this low again in our lifetime. So you can borrow money and you can buy a home, and in many cases, your mortgage is gonna be less than your rent. So it's a great time to buy. I have a program you can go to on finishrich.com, and it's free. There's a thing called the First Time Homebuyer Program. And at the very top of this website is a course that will show you how to go from renting to buying your first home. There's 5 videos there. It will walk you through step by step how to build a down payment account, how to get your credit score up, how to find a mortgage, how to find a home, how to work with a real estate agent. In that program, I talk about how to pay your home off early. A biweekly mortgage, what you do, and it really doesn't apply in Italy, but in the US, if you take a mortgage and you split it in half, and you pay half every you take a mortgage, your mortgage is $1,000 a month, and you pay $500 every 2 weeks. you will pay a 30-year mortgage off in about 25 years. So a smarter thing to do right now, honestly, would be to take a 30-year mortgage and refinance it to a 15-year mortgage. Because right now you could probably cut your expenses and pay your mortgage off 15 years faster.
Well,
Kimberly's raising her hand. I see her.
yes, Kimberly.
Sorry, I know, Elena, you're reading the questions, but hasn't that changed with our lower interest rates now? I mean, I was able to get a 2-point-something loan on a, it's crazy.
Yeah, I just said it's changed. Now you don't need to do a
Right.
biweekly mortgage. Now you should do a 15-year mortgage because
But then
Well,
you're
because-
paying the same amount out as you would be.
you're not, because you're paying, you will save on an average mortgage well over $100,000 if you pay it off in 15 years instead of 30.
But is there a benefit to doing that when you're 54 years old?
Yeah, you'll retire.
At
You'll have no debt.
3%. But how can you look at 3% as a bad debt when you can make more than 3% on your money?
I'll tell you, it's a totally fair. No, it's a totally fair question. I think. Here's what I can tell you in the real world. People who pay off their homes and have no mortgage retire on average 5 to 10 years sooner. So all I can tell you from working with clients who have retired early, the reason they could retire early is they had the financial freedom of no debt. But there's no question. I mean, look, rates are so low right now that if you want to do a 30-year mortgage and take the extra money and put it in the stock market and you're not going to panic and you're going to leave it alone, then absolutely go for it because you'll make a higher return in the stock market.
Mm-hmm. Well, in fact, Kimberly couldn't wait to get in and put her important question in. So this is even more important, but probably from everybody. Are you, David Bach, willing to do some classes here in Florence for ladies who want to learn, or for teenagers, or?
This was it, ladies. This was the class.
Are you planning that?
No, I'm not. I am committed to doing very little work next year so that all I can do is have fun in Florence.
This was possible. Okay, I have one more here. What is a good investment now, or where is it smart to put your money in this moment? Executive education, new jobs, new projects, or what?
You know, I think the best investment you can make is on your own development, whatever that means for you, right? Like, so in addition to like specific investments like stocks and bonds and where put your, real estate, I think investing in you. So what is it going to take to grow you? What do you need to learn? What's the next skill set that you need to acquire to up your game at whatever you do? Or maybe there's something you want to do, but you don't know how to do it. Well, who does? Who else could you go take a classroom that could teach you what you need to learn? Like, the beauty today is that there's so much that can be learned online. Is an executive education a good investment? I don't know. It depends on what you're trying to accomplish. Right? Like, I know a lot of people right now that are like, they want to reinvent their life.
Yeah.
And part of reinvention is you have to become like young again and start learning again. And that's hard, right? Like, we all want to change our lives, but then changing our lives requires new knowledge. And part of new knowledge is that learning, being new with something can suck because you're not good at it. Right? Like, my kids are like, oh, I hate doing this. I'm like, of course you hate doing this. You don't know how to do it. But what happens is once we learn how to do something we get really good at, well, then we get bored and then it's time to learn and grow again.
Now, I hook in on this because here is a question. I noticed your class on your site, start late, finish rich. Is that speaking to me because I am certainly starting late, or can I have an appointment with you here in Florence? I really need an advisor. This is again, they all want you.
Yeah. Well, I love that. That's the beauty of doing this when you're not selling anything is that I can just go, no, I'm sorry. No. You should take the class. My classes they're not free, but they're so low cost. We created these 2 amazing courses on my website. Those courses are on davidbach.com. There's the Start Late, Finish Rich class, and there's the Latte Factor class. Those are 2 classes with like 19 videos each. They're so inexpensive, and you can have me for 2 full days, and you can watch me with your family. But no, I'm not working with anyone anymore right now, one-on-one. So One of the things I will say to, to give all of you permission to, is that the phrase, no, I can't do it, is, you should use that phrase. You need to ask yourself, what do you want to say yes to in your life? Because if you're clear about what you want to say yes to, it's easier to know what you want to say no to. I can tell you that probably all of you say yes to too many things.
Yes.
And you need to start having a not now list. Instead of a to-do list, you need a not now list. And so when people come to you, hey, can you volunteer for this? Hey, can you do this? God, I'd love to, but not now. I'm not, no, right now I'm focused on doing this. Like, you don't even have to explain why you just, no, thanks for asking, but no. You do that, you'll have a better year next year.
Yeah. Bravo. Thank you, David. I think we really had an amazing evening. You shared so many. No, really, it was wonderful.
Thank you. Thank you.
I think we'll get lots of positive feedback. I hope you also enjoyed sharing your ideas and your commandments, like you write in your books. And yes, I really think it was wonderful. I hope you were great too, actually.
Thank you. Well, now that I can see the whole group, I can see my wife. Hi, Alicia.